What we can also see is that slowly but surely, look at long positions. Increasing 51, 58, 63, 71, 86. The banks are accumulating and I'm accumulating. How's it going, fellow traders? Magic Trader here. Welcome back. Welcome back. We got a great episode for you today where we're going to take a look at the latest data that we got for February 21st, 2023. Okay, this is the data that we got just recently, and it's for February 21st, 2023. Here's a brief snapshot of that data by the institutions. And let's take a look at what they are doing with gold. Welcome back, guys. Thanks for joining again. We're going to be taking a look at what's been happening with the banks and their positions based on the CFTC report data that we've been collecting over the last few weeks. They are behind about 2 weeks now. Originally, they were back 3 weeks because of some computer issues that they've been having. So they've been telling us that they wanted to release the information to us when they could guarantee that the data was accurate. So they're slowly trickling out the data, and this is the latest of it. All right. Okay, so what do we have here with gold? So as you can see, gold back up in this area here, August to November of last year, we could see that they were accumulating a short position, and then they took profits on that short position right through here. Recently, again, they started adding to their short position to get price down into this buy zone that we have located. Okay, this is an institutional buying area. So what we have concluded is that this whole situation here, all this is a bearish cycle. Okay, accumulation, distribution, accumulation, distribution, but the focus has been mainly on short positions, accumulating them and then distributing them. Now, just recently, we noticed that they started to accumulate a long position. Okay, so this is a bullish cycle within a bearish cycle. All right, and so this was this first portion of price action, just a few candles, as you can see, represented here on the chart. A big accumulation of long positions from 211 to 256. That's quite aggressive. But then all of a sudden, the last 3 weeks, they dropped off. 223, 210, 210. And now we're at the weekly area of demand again. And just this past week, we saw a big push to the upside from that area of demand. Okay, so if you remember what happened, let's just show you. Here we have it. You can see non-farm payrolls came out and they were positive. Now here's the thing. Non-farm payrolls came out, it was positive, so you would think that the dollar would rally and gold would drop. Well, they used this positive data to lure retail traders into shorting gold. Okay, and this was as price was coming down into the buying area. So prices in the buying area, retail traders were selling gold, and they were selling to the banks that were buying the gold from that area. Okay, so what do we get from all of this? What is the next stage? Well, we have a buying area in play. So, you know, it's likely that we're going to see price rally upwards. Okay, likely. But we want to see more buying taking place because remember, the buys went from 256 all the way down to 223, 210, and then still at 210 the last 3 weeks, right? So, but that only covers up into this area here, okay? So when we get the latest data, we'll start to see likely them reaccumulating their long positions again. So over time, we are expecting price to rally up, and we think that there's a very good chance that this may be the very bottom of price for 2023. Okay, now let's take a look at oil. with respect to oil, there's not much going on here. Okay, there isn't any type of trends forming on the chart. Okay, no trends to the upside, no trends to the downside. Same thing with the monthly chart. The only thing that we have here is an institutional buying zone that's in play. Okay, this is a buying area where the banks were last buying. So is price going to head higher? It could, but we're not seeing any strong buying here when we look at long positions. They've been in the 300s, okay, low 300s, mid 300s. They're not moving from that. And if we look at shorts, the same thing, very cooled off. Both longs and shorts are very cooled off. Now, there is a slight bullish bias when we look at the coloration of the cells here. But other than that, there's not much to go on with the oil. Okay, so we move on. Next, we have the dollar. Okay, here's the dollar. Let's take a deep dive into this. So let me first start by pointing out that we have here on the dollar a bullish cycle that has been playing out up until recently. Okay, there was an accumulation of long positions throughout here. They got really aggressive with their longs here, and then we saw profit taking on their longs, which caused price to drop. Recently, we saw them increasing their short positions. All right, all throughout here, increasing short positions, and then that abruptly stopped. And we can see that in the data all throughout here. A big increase from 15 to 18,000, and all of a sudden, 12, 11, 12, 14. Now, I want you to look at one number here. The last number that we got on February 21st was 14,271. As you can see, that number is below the average of 14,523. When the number of shorts become greater than the average, then we will be entering into a bear cycle again. But we're not there quite yet. Okay, and when we look at the coloration of the cells here, we can see that they were bullish, and now we are more into neutral territory. Okay, so right now, neutral with the dollar. Okay, neutral with the dollar. If you take a look at what the sentiment is for the euro, their retail traders are mostly short, so they're mostly long right now. And I'm not really surprised by that, especially after the non-farm payrolls positive data that came out. I suspect in the coming weeks, we're going to see more positive data for the dollar, because they will likely want to shift that from being slightly bullish to aggressively bullish for retail traders. And this may be the setup for a much larger drop in the dollar. Okay, let's go over to Aussie. So with respect to Aussie, this one has been in a short cycle for a long time now. We've been talking about this for quite some time. All throughout here. Short cycle. Okay. And in amongst this short cycle, what we've experienced is accumulation, distribution. Accumulation, distribution, accumulation, distribution. All right? But this has been in a bearish cycle this whole time. Now, if you look at long positions, you can see that the column is all blue. Why is it all blue? That's telling us that they're neutral with their positions. So they're not focused on long positions at this point. So if they're not focused on long positions, we shouldn't be focused on long positions. The only focus they've had is on short positions. Now, price is coming down right towards this area here. And this area is an institutional buying zone. Okay? So if price gets down a little bit further, we could see a big push to the upside, which would be in correlation, positive correlation with gold, as the Aussie typically is. All right. If you look at retail traders, they are massively long right now, massively, as price is declining. So they'll probably want to shake out those retail traders as price drops into that demand area. And then when they can switch them from being long to short, then we'll see a push to the upside. USCAD. All right, so let's take a look at this one. This one, up until our recent data, they have been in a bullish cycle. All right, there's been a bullish cycle taking place here. Now, within this bullish cycle, you can clearly see that they've been adding, profit taking, adding, profit taking. Okay, right? And over the last couple weeks, we can see 59,000, but compare that to the average. 59,000 is above average. So we're still in an accumulation phase. As long as that number stays above the 13-period average, we're in an accumulation phase. Once it drops below, it's a distribution phase, meaning that they're offloading those positions. Okay? Looking at shorts, they're very cooled off, so they're not even focused on shorts right now, which is an interesting thing because we have the Canadian dollar getting weaker. Okay? Canadian dollar getting weaker. And we see a setup for the dollar to begin to drop. So we would suspect that there's likely going to be some downside here. But let's keep an eye on the USCAD data going forward and see if that starts to build to the downside. Let's go back. USCAD retail traders are mostly short right now. Okay, so just like the Aussie, they'll probably get them out at the highs and switch those shorts into longs. And then when they do so, that's when they will drop price. All right, let's look at the US Swiss. Longs and shorts are cooled off. Nothing to base any decisions off of here. We see a weakness here on this weekly candle. Likely we're going to see more downside simply because of the dollar weakness that we are expecting. All right, Euro. This one's a good one. This one's a good one. Very interesting. Take a look here. We have a bullish cycle in play right now during a what? Accumulation phase. Okay? This is accumulation. So they've been aggressive with their positions. Look, this is very aggressive with long positions. But I'll bring your attention somewhere to this number up here. Their maximum large size has been 266,000, okay? That's their maximum size that they've ever had. We're at 236. We're almost at their maximum size, which leads me to suspect that there's going to be profit taking, okay? If there's profit taking on long positions, it will typically cause price to drop, okay? So we got to be aware of that. There's going to have to be some profit taking here, and that's going to put pressure on price to the downside. Only thing is that retail traders are mostly short right now, so I'm suspecting that they're refraining from dropping price right now because of that. So they'll probably want to get retail traders to take on more of those long positions that the banks want to offload. So they're going to have to come up with some catalyst to really get retail traders to start taking those long positions. Okay, what is it going to be? I could not tell you. I have the faintest clue as to what they're going to do. But this is something that I just want you to be aware of and something to keep your eyes on. It's certainly something that I will be paying attention to because I want to see how they're going to offload all these long positions. If gold is set to rally, the dollar is set to drop, that would typically mean the euro is going to go higher, but they're already positioned long. So it's going to be very interesting. Let's keep an eye on this one as it unfolds. Retail traders mostly short, but not greatly short, just mostly short. And pound, let's take a look. So pound, they are in a bearish cycle, have been in for quite some time, as you can see. They closed out some of their positions, and then they start to reaccumulate shorts again. Where are we at right now in terms of positions? Look, the latest set of data shows shorts at 66,000. 13-period average is 59, so they're in an accumulation phase of short positions, okay? Accumulation phase. But even though they are in accumulation phase, I will bring your attention to here. You see how down here they were, the cells, the coloration of the cells were red, then blue, then red. And recently they've been more bluish than red. It's neutral. So even though there is an accumulation phase, overall the sentiment is neutral. All right? So we shouldn't be buying pound or selling pound because of this neutral bias with respect to the banks. We want the bias, the accumulation phase, and the supply and demand zones to all be in positive correlation with each other. And then that's when we get our buy signals, okay? Or sell signals. US dollar, Japanese yen. So what do we got going on here? The latest was here, okay? This is a bullish cycle. And within this bullish cycle, we had an accumulation of long positions and then distribution of long positions. Most recently, we have just a little bit here, 66,515. It's above their average, so it's the beginning stage of a long accumulation, all right? But we don't know if this is going to hold itself because it's just the beginning stage. So we'd like to see a little bit more data to be able to confirm that. Again, just like the pound, look at the latest sells here. The coloration are mostly neutral. So I wouldn't be trading the US dollar, Japanese yen right now. And again, remember what's going on here. US dollar is set to drop. That's what we're seeing. Gold set to rally. That's what we're seeing. So if the dollar is going to get weaker, there is going to be pressure to the downside here that we would suspect to see. Okay? But look where price is. We're not hitting any supply zones. So it makes it very difficult to time the exact moment that price will start heading lower. All right, we got the Kiwi. Take a look. Longs and shorts, both columns here are neutral. So there really isn't any strong bias in terms of their positions. But I will bring your attention to the fact that when we look here, it is bullish. The sentiment is bullish, okay? That's because we're taking their percentage of long positions versus their percentage of short positions, and there's a clear bias to the long side. The only thing is they're not aggressive with their long positions, so there really isn't any strong buying taking place here. Again, we'd like these elements to be in correlation with each other to give us a strong buying signal, and we don't have that at this time. All right, when we look at retail traders, they are mostly long, okay, which is why price has been dropping. So they'll probably want to shake them out of being long and get them into being short, and then we'll see price rally up. Okay. One last one I want to show you. This will be a little added bonus for you. Take a look at this one. Here we go. U.S. Treasury bonds. All right. I'm tracking them. Yes, indeed. So let me show you something very interesting. Okay. So when we take a look at bonds, we can see that they have been in a bearish cycle for quite some time. And, you know, it's completely expected because they've been dropping price hardcore. With rates going up, bonds are dropping, okay? Now, I signaled to our members and students that this is likely going to be the trade of 2023. I've already started to position myself long in bonds, and I suspect that price is going to be going up much higher from these areas. It's going to take some time, though, because we are in a bearish cycle. And if you take a look, I will bring your attention up here. Current positions from February 21st is 241. Is that above the average of 220? Yes. So we're still in an accumulation phase. Okay. But it'll take some time until that starts to show us a distribution. Okay. Because prior to that, we were at 256. So now we're at 241. It's too early to tell if this is a distribution phase or if they were just reducing positions temporarily. But if we see this number go below the average, then that means there is a trend here of them distributing. What we can also see is that slowly but surely, look at long positions. Increasing 51, 58, 63, 71, 86. The banks are accumulating and I'm accumulating. I do what the banks do. And because we are reaching areas where we believe price is going to reverse, this is where we can get in extremely early on this position. Okay. Sentiment, yes, is bearish, but I don't believe that this is going to stay here much longer. Okay. You see the sell already? This one here starting to get less red. I believe this is the beginning stages of a massive reversal, and we're going to start seeing price head in a direction like this. Okay. So this is what I'm watching for. This was a little bonus for you that trade bonds, all those that trade bonds out there. You want more information, you want to learn more about how we do this, the supply and demand dynamics. The 2 new classes that we're starting up, we just did one earlier this week where we take the CFTC data, historical data, and we go back and we take a look at what the banks did back in the day, in the 80s, 90s, and the 2000s. Right now we're looking at gold, and we're discovering so much in this class with respect to what the banks did with price and how they used their positions to move price along the charts. What does distribution look like? When does it happen? What zones are hit when these areas? What zones are hit when distribution and accumulation take place? So much that you can add to your trading to put that winning edge on your side. So if you want to join, www.whiteoakfx.com is the website. Come, we'd love to have you. And that is it for now. Thanks for joining. Enjoy the rest of your weekend and be good out there, okay? Talk to you later. Bye-bye.